Hello, everyone, and welcome to another edition of the Forex Technical Market Update for August 5th, 2015. Okay, we're recording this just at the beginning of the US session, and what we see so far is that the US dollar index has attempted to break above critical resistance in the 98.14 region on the US dollar index. Okay, so what we see is that the market tentatively, and this is very debatable, it tentatively closed above this triangle. Let's look at it here. And this is where triangles can be fairly subjective. If we draw the triangle from this peak, which is technically by the rule book, the latest swing high, and down to here, then the market closed above it slightly yesterday, and we do see some follow through. But what we need to look for is that the market needs to close above this area, the 98.14 level on the US dollar index. This is the important area. Now, if we draw the triangle another way, let's say above these highs, then the market has not broken above the triangle. So, and that's why technical analysis can be very subjective. And which is the right way? Well, I can tell you that there are folks that are drawing it this way, and there are folks that are drawing the triangle this way. And that's why it's such a subjective science. It's not an exact science. It's really up to one's interpretation. Okay, so that's what's happening in the US dollar index. Now, if we do see a close above this outer trend line, that would be very bullish for the US dollar index. Taking a look at the euro dollar, we see that the market, again, if we draw this, we have two lines we can draw. We can draw it below the lows, and the market has not even come close to the trend line, or we can draw like this, which the market has just touched the trend line and is bouncing off of the trend line. Now, a close below in the euro, a close below 108.09 would be bearish for the euro, and this 108 region has shown itself to be critical support, because the market came down here in mid-May and bounced, came again in mid-July, and we saw a bounce. So if we do eventually close below this level, that would be very bearish for the euro. Okay, taking a look at the British pound. Euro is weak. The British pound is strong so far this morning. We see that the market is attempting once again to break above the 157 resistance area. And I suspect that there are a lot of stop losses above this 157 area. So if we do see a close above this 157 area, it could trigger a lot of stops, and the market could quickly move up to 158 and even a 159 area for the British pound. Japanese yen this morning is unchanged after we saw positive price action. The market closed above this doji pattern, and the area of resistance in the Japanese yen, it's easier to see on the 4-hour chart. Critical area of resistance in the yen is up at this 124.50 region. So the market is currently trading at this 124.50 area. And now this is not subject to interpretation. You can see that this area was tested. And why is this area critical resistance? We see that this area is tested 1, 2, 3, 4. So this is the 5th time that the market is trying to break above this 124.50 area. So what does that tell us as traders? This tells us that there is some supply up at this area. There's a lot of sell orders up at this area, and that's why the market cannot seem to penetrate it just yet. But could the fifth time be the charm and the market close above the area? We have to wait and see. But we could see, I suspect again, that there are a lot of stop losses above this area. And if we do close above it, let's say the market hits 120, 124.80, 124.90, and we manage to close above it on the 4-hour time frame, we could see a move quickly up to the 125.50 or even 126. On the downside, if we close below 123, that would be very bearish for the Japanese yen. Okay, moving on and taking a look at gold. There's still a lot of interest in gold, and almost every day I receive an email about gold. But what we have seen over the last couple of trading sessions is stability return after the plunge. And if you take a look at the 4-hour chart in gold, what you see is that the market is in a not a well-defined channel. Let me just remove these pivot points. But you see that the market is in a consolidation pattern here. That's a consolidation pattern in gold. And the gold market entered this consolidation pattern in a downtrend. And as you will hear me say a lot, that once a market enters in a downtrend, more likely than not, I would say about 8 in 10 times. That's a rough guide. It could be 7 in 10. It could be 8.5. Could be 9 in 10. But really, all I'm saying, the essence of what I'm saying is that more likely than not, the market will continue to the downside and break down below. That's a classic rule of technical analysis. So that is what I am expecting in gold. If we do close above the 1110 or 1120 area, I would say 1120, we could see a move back up to 1140 in gold. But this market still remains very bearish. Lower highs and lower lows in this gold market. And this is a very bearish sign in gold. Taking a look at Australian dollar. Australian dollar hasn't been doing that badly this morning. After a huge rise yesterday, the market closed above this doji, and which was very good to argue that this market could retrace. So if the market remains above this doji and remains above 73.66, that will be bullish. If we do manage to close below 73.34, that would be bearish, and we could continue to see the slide in the Australian dollar. Canadian dollar market is unchanged as of this recording, and we still remain above the critical area of resistance up at this 130 area. And as I said before, a close above this area, we could see a move up to 135 if the market does close above this area, because this area is critical resistance in the Canadian dollar and the USD versus the Canadian dollar. The Canadian dollar remains very weak, and it remains weak across most currency pairs, and especially the British pound. We see a weak Canadian dollar above the British pound, and we have been speaking about this market ever since the market bottomed in near this 184 area. We're currently at 205. That's over. I've been speaking about this market for some 2,000 pips to the upside, and look at this swing in the market. We had a swing from 175 up to 195. Market pullback. We have another beautiful swing up to 205. So yes, these markets trend very well, and the key is to hop aboard this trend and ride the trend until it ends. If you would like to, if you would like to start profiting, and if you'd like to start benefiting from the forex market at this time, you can click on the link below to get the signal sent directly to your trading account. Okay, thank you very much for listening to this update, and I hope you have a wonderful day. Thanks.